All right, perfect. So this series will be your opportunity to learn, some new things about mortgages in general, the mortgage process, different types of loan programs that are available, different ways to help and support your clients. And I think just starting out, getting to know the mortgage process from start to finish and who's all involved in that process so that you can guide your clients appropriately and set up pretty good expectations with them going into it. Because we all know that consumers sometimes don't realize that there's a lot of people working behind the scenes to get them to closing. Typically they see two people, they see the real estate professional, and then they see the loan professional, and they don't know how many people it actually takes to get to closing. So I think that's important to really understand all of the things, all of the boxes that need to be checked, all the hurdles we need to get through in multiple different types of situations when it comes to getting that loan, completely processed and to the closing table. So that is what Anthony is going to start out with today. And like I said, this will be a series where every other Monday he will be available with a different topic, but feel free to, ask questions that you have. If there's something that you don't understand, especially, Joe and Yen, you guys are brand new. This is your opportunity to ask. Anthony has been in the business for, I don't know how many years now, 25, 26, something like that.
Well, when I tried to retire in 23, it was just a little over 30 years, but now I got talked back into opening a mortgage company for ROGU.
Yes.
Here we are.
Yeah. So he has a ton of experience through a bunch of different markets. So he'll really be able to answer those questions for you. And this is somebody that you'll want to keep in contact with, because when you're in a transaction and you have those questions, sometimes I can answer mortgage questions, but I'm not mortgage licensed. So there's a lot of times and a lot of situations where I simply may not know the right answer. So we definitely want to make sure that you know who your team members are and are able to reach out to them comfortably and confidently, and know that you can get the answers for your clients so you can best serve them. So I'm going to shut up now and I'm going to let Anthony take the reins, but I'm here. So if anybody needs anything, and I may poke in with questions of my own, just let me know. Take it away, Anthony.
Thanks, Christina. Good morning, everyone. Just a quick intro. Most of you know me except the new agents. Welcome, Joe and Yen. Glad to have you as part of the One family. Christina already mentioned, since this is a mortgage topic call, I've been in the business a little over 30 years. We decided early this year to open a branch for, exclusively serve the brokerage, although we can do outside business. So we're super excited. We had partnered with Think Mortgage. Just to give you an idea, there are different types of lenders, right? You hear the word lender, it's kind of a general term. Lender could be a bank, lender could be a mortgage broker. Lender could be a retail mortgage company like Cross Country Mortgage, Union Home Mortgage, and there's tons of independent mortgage companies out there that are considered retail. The unique thing about our advantage here at Think Mortgage is we are a hybrid. What does that mean? We have the best of both worlds. So the old saying, have your cake and eat it too, well, that's a thing now. So now we have Think One Mortgage, which offers anything a retail lender would, all your traditional mortgage programs, your FHA, conventional, USDA, VA. We're not going to get into the nitty gritty of how all those different programs work. That would be better served at a different, Mortgage Monday. But I just want to let you know, we also have all of the non-traditional mortgage programs, which I've already saved a couple deals. I see April's on the call. We did some non-traditional, what the industry calls non-QM. A non-QM mortgage can be something for like a self-employed individual that cannot show income. As long as they're self-employed for 2+ years, they have sufficient bank statements that show they do make a consistent income, we can qualify that person. Lots of different non-traditional products, DSCR for investment buyers. It goes on and on. Condo purchases. I mean, we probably have 37 different investors on our wholesale broker side, and then get all the retail stuff. So what does that mean for you and your clients? The chances for options for pre-approval are going to be a lot stronger. And we're going to be very competitive since we are a bank as well, combined with a brokerage side. We're going to have very, very competitive pricing and a lot lower fees because we control that on our end. We don't have to, we're not layered per se. Big companies, like I mentioned, Union Home Mortgage, Cross Country, and some of the other smaller, medium-sized companies, they're layered with regional management and all these different things. Well, someone's paying for that. Nothing's for free. Just like when PNC Park, they advertise they spend, $50 billion to put their name on a ballpark. Someone's paying for that. It's not just, oh, wow, I love the Pirates. I'm going to go out and open a checking account or get a mortgage from PNC because they sponsor the Pirates. There's a cost to do business with that. So in short, we're very competitive and we have a really good team involved. Just to give you an idea, I am the branch manager. At this time, as we search for LOs, we are handling all of the loan origination. That's what a mortgage loan originator does, but I'm also managing the branch. But I will say they weren't able to make this call, but I have an amazing back office support team. We have 3 people. We have Anita Pearl. She's my lending partner. She takes the loan from application to close. Once we pass over the loan application and deals with the agents, the title company, and the borrowers themselves. And she also communicates periodically with the realtors yourselves. We have Heather Rivera. She's my senior loan processor. She's working behind the scenes to make sure we have the right documents in the file and everything's getting set up for underwriting. Then last, we have Esther Pearl as well. Esther is my LOA, loan officer assistant. She's working in conjunction with myself as a branch manager, future LOs, and she's working with Anita and Heather to make sure everything's moving timely. So we have a really good support team right off the bat. We have three people on the back end working this. And I know April's on the call. LaDawn, you're here. You have some files in process. We've already closed loans with you, how great the process is. But that gives you a quick background, how we're set up and how we can accommodate yourself as realtors and your clients to make sure everything goes smooth as possible. To tell you a bit about the pre-approval process, what we look for as a lender and communicate up front between the realtor and the client is a nice intro, an introduction of a quick text or email. It says, hey, Anthony, this is Mary and John Smith. They're looking to buy their first home. We would like you to reach out and pre-approve them. Some realtors, that are a little bit more seasoned and vetted in the business, take it upon themselves to share our app. We have a mobile app. Like most of the technology in the business today allows us to do everything online. So we don't have to have, the old-fashioned way of doing it like we did years ago, call them up, come into the office, take the application over the phone, bring in all your documents, although sometimes bringing in the documents would help. We're going to get to that when I explain to you why. Because a lot of times through the process, the clients are like, well, I already submitted that. Why do you need it again? And we're going to get to that in a minute. But back to the pre-approval process, what I would prefer, that would really help your business scale, is a group text. Put myself or the LO, Anita, usually myself. Again, it starts with myself. Put myself on a general introduction. April does this a lot. The other agents are a little bit newer. Belle and I worked together once, but it was a little different situation. Good to see you on the call, Belle. Mark Peterson, very, very good. He's not on the call, but he does this very often. He will send a group text out. Hi, did you meet Anthony? Anthony's with Think One Mortgage or in-house lender. Creates a nice intro and it keeps a good communication trail from the file opening to close. So for something that comes up, we respond right back onto that text. Some agents do it via email, which is fine too, whatever works for you or your style. But I recommend starting the pre-approval with an intro. The intro works very well for us. My team's used to doing that, and we get the process started right away. Generally, with the pre-approval process, once they fill out the online application, they're pre-approved within 24 hours unless we don't have documentation. Some clients are reluctant because they've talked to other lenders and maybe they've been turned down. And they say, well, I didn't have to provide that before. Why are you asking for it? Because we don't issue a pre-qualification. A pre-qualification, in simple terms, is an online application and a soft pull credit. If the information on the application isn't correct or if it's not accurate, I don't know why a lender would do that. There are lenders that are doing that. But we ask for full documentation up front. 2 years employment. So if it's 2 years employment, we're asking for W-2s. If they're self-employed, it's going to be 2 years tax returns. If they have a business, it's going to be 2 years business returns, and so on and so on. We ask for assets to close. I don't know how many times I've heard in the industry over the past 30 years and now having ownership in the brokerage, how many times agents struggle with, we have an issue last minute or in the 11th hour. The more we collect up front, it may be a little bit slower pre-approval process, but waiting 24 hours or so for a pre-approval is better than hearing a negative, in the 11th hour that, hey, we got a hiccup, we got a problem. You can try to avoid all that by collecting all the appropriate documents up front, issuing a solid pre-approval so they know when they get to the underwriting stage, that the chances of that loan going through are 99%. And there's always 1%. What's the 1% we can't control? They go out and maybe run credit cards up. They make a job change. They quit their job. I've seen that happen. Don't ask me why you're buying a house, you quit your job, but we've seen it all in 30 some years. But the things that we can control, we're going to control. Making sure they have the funds to close, that they have the proper documentation for income, and we also make sure everything on the credit report is verified up front. The speaking credit reports, as a competitive edge as well, we decided to go with soft pull credit up front. 99% of the time, the soft pull credits are very accurate. So we have a really good picture up front without scoring that borrower. So if we have a borrower that has a lower score that's borderline, say someone needs a 580 to go FHA, we can go all the way down to FHA guidelines of 580 with 3.5% down. If they had a 578 and someone just did a hard credit pull just to get a more competitive offer or see if they had anything offered different to, maybe a better product, that would ruin their chances of getting approved. So soft pull credit is very, very competitive, and it helps the borrower while they're shopping for a house. Because most of the time in this market we're in now with limited inventory, the credit reports are only good for 90 days. So if you pull a hard pull credit, you're pulling one again when you get into underwriting. Christina.
So I know we have a couple new people online. Can you just real simply explain the difference between a soft pull credit and a hard pull credit?
Absolutely. Great question. So a soft pull credit is similar like when a client or maybe yourself has something on Credit Karma that says, hey, check out this credit card offer or shop for new insurance for your home or auto without a detriment to your credit score. Soft pull credit means we don't score the borrower. We're looking at the bureaus themselves. There's 3 major credit bureaus in the United States: Equifax, TransUnion, and Experian. We pull the soft pull credit version of that without scoring them. We do that so we can take a peek at it to see how we can help them or if we can help them or what the options are. If we did it the other way and we scored them with a hard credit report and we can't help them, now they're 5, 6, 7 points worse, and they may have to wait a little bit longer to get pre-approved if they were borderline. If they were high-rank clients and that didn't affect anything, maybe it still would be okay. But from a business side of things, soft pull credit's a better way to go, and for the client as well. So we don't score them. Nothing shows up that we pulled their credit. So hopefully that helps explain and makes that a little bit easier for you. So anyone have any questions on what?
Joe has a question.
I see it. Hey, Joe.
Hi, I do have a question. So I just want to ensure that I'm understanding this because I did finance for an auto dealership. So when you're not getting a score at all, you're just looking at the credit.
We don't.
You do a soft pull.
A soft pull credit does obtain a soft score. It's not the same as scoring them. So when a hard credit report will report that inquiry. It's inquiryless. Basically, it doesn't show we had a hard credit inquiry. When we do a soft pull credit report, it does come up with a score, yes, because we wouldn't know how to gauge that client's profile.
Okay, cool. Thanks.
Absolutely. It's a good question. So again, I've been out for like 3 years, so bear with me. Have all the experience in the world to get you the answers, but sometimes the presentations that come to me a little bit slower, so I'm a little bit different role now. But more questions, the better. Helps you learn, and helps me learn what's best for you guys as far as retaining the information. Absolutely. So as far as the pre-approval process itself, as far as opening up some type of an intro communications, how we get them pre-approved and what we're looking for. 2 years employment. That could be self-employed or employed. It could also be 2 years retirement. If they've been in retirement 2 years and they've been on consistent 401k or taking in annuity income, as long as there's a 2-year history of some type of consistent income, that's considered acceptable income. We look for a certain credit score. There's credit score ranges all over the board depending on the program, and we got to make sure they have sufficient assets to close. If they're getting gift funds, it's another thing we look into up front. We're not going to get into all the different particulars today, because that's a whole other topic of the ins and outs of all the different mortgage programs. I just want to go over the basics. But any questions on the pre-approval process or what we look for or the advantages of the soft pull credit that we pull? No one? Okay. So the steps of the mortgage process. We take the application comes in, we get an alert. Once the alert comes over, I do a quick analysis of the loan. My lending partner, Anita, that I mentioned before, she does a full overview of the file. We pull the soft pull credit in. Then it goes to Heather to start collecting docs. Once the client sends the docs over, we issue a pre-approval within about 24 hours if they're send them over in a timely manner. So speaking of sending docs over, our software has the ability to upload docs automatically. It's through a system called ICE. They can just scan it in. It uploads them as a PDF. It's very clear. It's legible. We can get an answer a lot quicker. Clients are in the habit, especially first-time home buyers, of taking pictures on their phone, or pictures come over half cut off, or we send us your pay stubs or W-2s and it comes over as a JPEG. If we can't read those and we can't upload them to the system as a PDF, that just delays the process. And I understand that maybe everyone has access to a computer or scanner, but there are ways with the technology of the phones today to scan documents using your phone as a PDF, and they can email it to themselves and forward it to us if they can't figure out how to upload to the system. That's one way. Or sometimes the realtors get involved and say, hey, if you want to stop into my office, all of our offices have full machines for scanning capability. We can scan everything over for you and assist you. There's different ways to do that, so just whatever they feel comfortable with. But the sooner we get the documentation, the sooner the pre-approval is going out. Once we get the pre-approval out and they start looking for a home, Christina recently created, which Christina, I'm going to bounce back to you for a minute, which I thought was an amazing idea. We never had that in the past. Explain them the form now that it's on the ROGU agent website for when they want to make an offer.
Okay. Yeah, perfect. Let me pull that up real quick and then I'll share my screen.
That's brilliant. Wish we had it in the years past.
Give me just 1 second because I didn't have this pulled up ahead of time. Okay, let me see if I can share here so that all of you guys can see it. All right, can you see my screen?
Yes.
All right, perfect. So on your ROGU agent website, if you go up here to where it says more and you pull down on the mortgage department, we're currently building out a mortgage department page that'll have a lot of the information that you need right on your Realty One Group Ultimate Agent portal. And for those of you who are new, you can get to this in your One login system. So there is a tile for ROGU agent in your One login. You can also go directly to roguagent.com to get there. You cannot search it through Google because it is a private site, so you have to put it into your URL to get there. Again, it's in your One login. So you just go up here to more, pull down on mortgage department. You do have to be signed in. And this is going to give you all of Anthony's contact information here, a little bit more about him. And then down here, we're building out different tools for you guys as you're out with your clients. So if you want a quick link to go to the application, you can just click here and it goes to the apply now. So you can help your clients through that process, even if you're standing in a home, if you're at an open house, if you're at a Little League game and somebody wants to get pre-approved, you can do it right here. Also, if you are ready to write an offer, or if you already have an offer in hand and you need a cost sheet, you just click here and it's going to take you over to a form that has you fill in the offer details. So let me see if I can pull that up. My internet's being a little slow. It's going to take you over to our cost sheet request. So again, you would want to do this when you are preparing to make an offer and the clients want to know like the total mortgage amount, what their monthly payment would be based on the offer that they're making, or if they want to know their cash needed to close, they could do that here. So it's super simple. You just fill out the information here, your name, your email, so where they're going to be sending the cost sheet to, your client's name, so they can go ahead and look at the client's file because every client is different, property address, your offer or accepted price, depending on what kind of situation you're in. So say they're putting it on an offer for 200,000, you would just put 200,000 in here. Seller's assist amount. So that seller's assist, whatever that looks like, whether it's 3%, whether it's 6%, whether it's 0. If it's 0, you just put 0. Buyer paid commission. So this is the commission to be paid by the buyer, not including what the seller is going to provide. So let's say your offer says that the seller is going to pay 2.5%, but the buyer is going to be paying 0.5%, you would put 0.5% in here. It's going to ask for your buyer's broker fee, which the minimum is $685. You could charge on top of that. If you're charging more, please put that in as more. The earnest money deposit, so how much they're paying in their hand money, their assumed closing date or whatever closing date is on the contract that's already signed, and then some additional details if you have any. The more details you provide, the better. So if you already have an accepted offer, you can actually upload it here, and then you just go ahead and send. That is going to go over to Anthony's email, and they'll be able to prepare the cost sheet and then send it back to you.
That's awesome. Thank you.
You're welcome.
Couple notes on that, guys. So a lot of the seasoned agents, this form, we basically created this for newer agents because they really don't know the process. So they'll just shoot over a quick phone or text to the loan officer and say, hey, listen, I want to make a deal. What do I do next? That form we created really walks you through every process. And a lot of those questions are on that form years ago weren't there, especially the past couple of years with your BAC and before NAR got involved and changed everything with the structure of the offers. That really complicated the lending side because there's things we have to do on our end to make sure we don't violate thresholds. So if there's, again, we're not going to get into that today because time won't allow that because this is just more about the process. But if you're on a certain type of loan, there's seller's assist involved, there's gift funds, there's different tolerances, there's percentages that the buyer or seller are able to get. Without the lender not knowing that structure of the offer, that BAC, we have no idea if we violated the tolerance or if that approval will go through. So that's the reason we created that. We created that for 3 reasons. For the newer agent, to help them get in the habit of sending you a complete email with all that information to us to get over a cost sheet real quick or update a pre-approval. It's been in the system for a while. And for us as the lender to know the BAC structure, super important today. Sometimes the buyer pays a portion other than the 685, and sometimes the seller pays a portion. It's combined. We have no way of knowing it up front, and we don't want to give you a cost sheet with false numbers. The worst thing you want is the buyer to come to the closing with more than the estimated loan estimate shows. So if someone says, hey, I need $7,400 to close, and they're coming to closing with $8,300, it may not seem a lot to us, but to them, every dollar matters. So it's very, we prided ourselves in all the years that I did this full time before. It was very important to make sure the cost sheet was within a few $100s. And to do that, we need accurate numbers up front. It's our job to make sure the taxes are right and everything else. But 99% of the time, if the cost sheet is being prepared properly, the buyer should be coming to the closing with less than it's showing. Unless there's something we don't know about. Maybe there was an odd seller proration of taxes or something. But generally, of all the loans that I've closed for 30 some years, they're coming to the closing with less. So that's a plus. Plus, it makes you shine. The whole idea of dealing with a good lender and making the process smoothest to make you guys shine. You're the ones that are dealing with the clients day in and day out. Technically, you're our client. They're your client as the borrower seller. So that's how the relationship works well. But thanks, Christine, for sharing it. I think that's an excellent for the newer agents. But once we get out of the pre-approval stage and we either have that form come over or we have an accepted offer, which is great, we start the underwriting process. And in the underwriting process, we start to make sure the file gets ready for what's called conditional approval. So once we have all the final docs in the file, and maybe we have to update docs that we've had, if we had a pre-approval sitting out there for 60, 90, 120 days because they couldn't find a home, we update the docs, we get them into underwriting, we issue a conditional approval. A conditional approval doesn't mean they're done. Clear the close, or CTC, the famous initials in the industry, means you're done. All conditions have been met. What are conditions? Maybe clearing the earnest money deposit. I can't tell you how many times this year the earnest money deposit has been a problem at the end for some reason that the earnest money deposit wasn't verified or cleared. We try to make it easier as a brokerage, and we use earnest, but sometimes clients still send a check in and we put that into escrow and we do it the old-fashioned way, which is fine, but the lender needs to verify that with title to make sure the final ALTA matches and that EMD amount or earnest money deposit has been matched up with the exact dollar so they're not issuing checks back and forth at closing. So once the file goes into the underwriting process, there's a lot of things going on behind the scenes that the agents and borrowers aren't really, being brought into it. Unless we need docs at that point, which we're not going to, we're just waiting for our underwriting turn times, which right now are about 72 hours. We submit a file today. We're going to have a final approval back by late Wednesday, Thursday morning. Once we get the conditional approval, it'll tell us we need updated homeowners insurance, clear the EMD deposit. Maybe we're waiting for the title package to come back from the title company. All of that's going on behind the scenes in the underwriting process. The appraisal, waiting for the appraisal to come back to make sure it values. Does the appraisal have any conditions? What's a condition on an appraisal? Once the appraisal is ordered, There could be condition 4 if it's a government style loan, FHA, VA, USDA. It may have some of the common things like peeling paint, maybe some of the rooms. Again, I don't want to go into all this now because it's pretty involved, but there can be conditions on the appraisal that the buyer and the seller need to remedy before that appraisal is accepted in the underwriting. Once we get a full package, all the conditions have been met for conditional approval. The appraisal comes back, all conditions are clear and it values. And we have a title package back from the title company that shows clear title and all the tax certifications, lien letters, and so on are back for the lender. We prepare and issue what's called a CTC, clear the close. At that point, we notify you guys. You contact all parties involved, buyer, listing agents, title company, and your clients, and you schedule the closing. Once the closing is scheduled, us as a lender, we wire the funds or we wire the money to the title company so they have the funds to disperse. Very important that the timing is done properly. In the old days, I could tell you 80% of the time we were wiring funds same day of the closing. You really don't want to do that. It creates hassles. It could create delays. Our goal with the Janusa lending team is with Think Mortgage, we want our file CTC 24 to 72 hours out. Our primary goal is 3 days out, which has nothing to do with the rule that maybe some of you have learned when you got your real estate license about signing a CD 3 days out. That's a whole different set of rules that we'll go into at a different time. But if we CTC the file 2 to 3 days out, then it's a smooth process. It gives the closing department a think and the closing coordinator at your settlement company time to coordinate the final alta so everyone shows up. They have their funds needed ahead of time, which can be in the form of a cashier's check, or maybe they're wiring funds into the settlement company for the closing. So pretty easy process behind the scenes. It sometimes can take a little bit of time. On average, since we started this particular branch, we're running from 17 to 30 days. That's application, not pre-approval, application to close, depending on the loan type, depending how soon the borrowers are responsive, how soon we get the title and appraisal package back. 17 to 30 days has been our average for closing, unless we get into the busy season or we're dealing with what's called a non-QM file. I mentioned that in the beginning on our broker side. That would be like a bank statement loan for self-employed borrowers or a DSCR loan. A loan that has maybe non-traditional conditions, they may take a little bit longer. So sometimes you're in the 30 to 45-day range. Or I mentioned before about if an appraisal comes back and it has a list of 4, 5, 6 conditions that need remedied, peeling paint, GFCI, maybe there's a handrail missing for an FHA or USDA loan. We may have to wait on those things to be remedied, and that will delay the closing. But normally, you can expect us to close somewhere 17 to 30 days application to close. And pretty much, to be honest with you, that's it in a nutshell. We don't, with the technology we have these days and the application stuff being all electronically, the process is pretty smooth. And if you have a really good team behind you, which I'm fortunate to do, because I'll be honest with you, they do 90% of the work. I pre-approve the file. I review it to say what program is going to be best, and then they take it from there, which I'm blessed with because they all work for you and they work for me as well. I can't be any happier about the Think Mortgage team, and you all get to meet them at our summer launch party coming up here on June 25th. I invited out the key people. I couldn't get my whole team to go there because they still have to do things for us, but Anita is coming out. She's my team lead and my lending partner. So Anita will be here, our CEO and president of our company. And my business development manager, Gary Fazio, will be coming out too. So I have three Think team members coming out to introduce themselves, and you guys can ask them questions as well. They've been doing this probably combined experience of 35 years. With some really good people with the company. So who has questions for me? I'm the one doing all the talking about the process. Someone's got to have questions about something. Quiet. Christina,
I'm here.
you have questions?
No, I don't have any questions. I think that you explained it, pretty well, the whole process. I think it's just helpful to know sometimes, what kind of happens on the back end, because we do get a lot of, and I know over the 20 years I've been doing this, I get a lot of complaints from clients, but a lot of times those complaints are just because they don't understand. They don't understand. I mean, we talked a little bit about, I sent the document 4 times. Well, did you send a complete document? Did you upload it to the system, or did you send it in a text message, or did you send it in an email? And if you
Pictures,
have
yeah.
bank statements and that bottom of the bank statement says, you know, page 1 of 4, all 4 pages must be submitted in PDF format. So, you know, updating, you know, pay stubs and tax returns and those types of things, they have to be the most recent. So, I think sometimes it's just helpful as real estate professionals just to know some of these back end answers, and not just know like what to tell them to provide, but why, you know, because that helps people understand, and know that, you know, it's not, you know, the real estate agent isn't being mean, the loan officer isn't being mean. We just all have certain boxes we have to check, and different rules that we have to comply with.
Absolutely. And that's a very good point. I mean, it does happen a lot, and we try to eliminate getting 95% of the stuff up front because we want to make the process when they get to underwriting a little bit, you know, a lot less paper heavy. And to do that, you know, by collecting it all up front, having that solid pre-approval helps. But you're right. Pay stubs expired, EMDs need verified. There's a lot of different things behind the scenes, especially if it's a seasoned pre-approval. If that pre-approval has been sitting, most of that documentation is expired, except tax returns and W-2s. Obviously, they're good for a year at a time. But sometimes the buyers are not frustrated. So I think us as loan officers and agents, if we make our buyers very aware of what to expect, that the process will be smoother for all of us. So if we educate them, I think, you know, education is power, right? Education is key. So if we tell them, this is what you may or may not expect through the process, and we do this as a team because we're all working as a team. When we do ask them for something through the process that needs to be updated, they won't be as concerned about it. It'll be, oh yeah, they mentioned that they may need to do this throughout the process. And if we educate them on roughly how long this is going to take. Now, yes, you have a closing date on your sales contract that we have to meet, but also that's a drop dead closing date for everybody. We also try to get it done ahead of time. But documentation can be concerning, especially for newer buyers that don't understand it. They're very, you know, non-computer oriented. They want to use their iPhones and Androids like Christina to take pictures and send them over. Isn't this good enough? Unfortunately not. It has to come over in a certain format, or it has to be scanned, or we can't get it into the loan system. But it's a good point.
Mm-hmm. Any other
So-
questions for Anthony?
Quiet group.
No?
Tobias, I know you have a question. Sitting there quietly. What do you have for us? Maybe not.
I don't really have any questions.
None today. All right. Well, if that is it, thank you for putting on our first Mortgage Monday. So Anthony will be back in 2
We're doing
weeks.
more.
And what's the, let me check. What's the topic in 2 weeks? The topic is understanding credit and buying power. So we're going
That's
to
a
talk
good
a
one.
little bit about different types of credits for different types of programs, what those thresholds are, and then helping the buyers understand what their buying power is in their current situation. So thank you to everybody who has joined us. If you want to get a hold of Anthony, you can do so. His information is right on your roguagent.com website. So feel free to reach out anytime.
Yep, email's very easy. It's just my initials, ajanuso at Think Mortgage. It's thinkmtg.com.
All right, guys. Thank you so much.
Thanks, guys.
And
Enjoy the rest
don't
of your
forget to
day.
stay on the line. If you have any questions that you want to ask in private after other people jump off, we will stay on the line until everyone's gone.
Thanks.